we've got Robert Sockin, global economist at Citi as well, joining in on the show right now. Robert, hi. Thanks for your time. Robert, just scratching our head literally over here to try and understand, what this new world regime, if you will, is going to imply and how the globe is really going to adjust to these tariffs. If indeed, there is no recall or if countries are not really able to try and negotiate a deal with Trump.
Yeah, and this is a really challenging environment. And I think if these tariffs stay in place, we are at a minimum for this year looking at significant headwinds for economic growth to the US economy, for major economies around the world, and for the global economy more broadly. And there's still a lot of question marks. The administration has signaled that more sectoral tariffs are coming, so things like pharmaceuticals, semiconductors are possible. And I think what we saw last week is there's a real risk that countries retaliate. We saw that with substantial retaliation from the Chinese authorities. And if we get into a world where other economies are retaliating against the US, that's going to magnify the negative effects on those economies in terms of their growth and on the negative effects on the US economy and the global economy as well. So it's a very challenging environment. And I think we're going to see growth really challenged around the world and global trade depressed. If these tariffs stay in place, it's going to mean that global trade growth is going to be much lower for the foreseeable future.
Robert, for now, seems like between America and China, right? Because China is the first one which has said that, we're going to impose and slap a retaliatory tariff on America. Do you sense that in this kind of a scenario, this is not it? And maybe after this knee-jerk, one is bound to see some more pain across asset classes?
I think it really depends exactly on some of the factors we've been discussing, how long the tariffs stay in place, what other tariffs are added, and if other countries retaliate. I think that the substantial retaliation we saw last week from China caught many by surprise, certainly in terms of the size at which they retaliated with tariffs. And if we start to see that from other economies, I think there's going to be more downside baked into economic growth forecasts, potentially more downside for financial markets, because that retaliation really would show that not only the negative effects are larger, but it's going to make negotiations more challenging. And I think many people are hoping that there's going to be a lot of scope for negotiations going forward. And if you're getting into a trade war, the scope starts to narrow. So I think there could be a lot more pain to come. It's really going to depend on how these negotiations evolve and how other countries respond.
What's the worst case scenario, Robert? People are already talking about a recession in the US, and that's going to have a cascading impact on the rest of the world as well. But many are also saying it could be as bad as perhaps the Great Depression times, back to 1920s.
I think in terms of the negative economic effects, I wouldn't be in the depression camp at this stage. But I think we are looking for substantial negative headwinds. So if you look at starting with the US, all of the tariffs put in place, the drag on the US economy, the estimates range from about 1 percentage point off of growth to 2 percentage points off of growth. So that's substantial. But it doesn't necessarily mean the US is going to go into recession. If you thought the US was very strong going into these stresses and was going to grow above 2% this year, those numbers take you to a very low growth rate or somewhere near recessionary conditions, depending on where you were before. So I think the negative effect is very large. I would be on the larger end. I would be closer to 200 basis points off of growth. But a recession depends on, again, where you fall in that range, how long these factors last, the retaliation we get, and how resilient the US economy continues to be. For the global economy, we were looking for a year like last year. If you in the beginning of this year, last year, the global economy grew 2.8%. Year before that, it was 2.8%. Normally, the global economy grows around 3%. So those years were a bit below trend. We were expecting this year to be more of the same. Now, I think we're looking at global growth in the low 2% range, given these stresses. And it could even dip further depending on, again, if countries retaliate, how much worse the situation gets. So I think we're not necessarily in a US recession or global recession, but we are going to see significantly weaker growth because of these policies than we would have seen otherwise.
Interesting. Robert, I'm just wondering, what kind of stance do you think the Fed is going to take? Up until now, of course, Powell is saying that they're closely watching the effects of policy changes, uncertain outlook on the trade policy changes. They're saying that they're well equipped to handle the risks and uncertainties. But do you sense that the Fed is going to be in aggressive rate cutting mode?
Yeah, the challenge with the tariffs are they are a stagflationary shock for the U.S. economy. They raise inflation and they lower growth, and that creates challenges for the Fed because that tells them to do different things. Higher inflation tells you to be hawkish. Lower growth tells you to be dovish. I think the Fed is going to look through the inflation effects and focus more on the downside risk to growth. And to me, that means you're going to see at least several rate cuts over the next few quarters from the Fed. So I think this is a Fed that's going to be easing policy because of the negative risks to growth. And that could start in Q2, they could start easing again. But I think you're going to see at least several rate cuts throughout this year, given these stresses. And so even though their inflation will be higher, I think they're going to focus more on the growth side and interest rates are going to come down.
All right, Robert, with this, we'll let you go on that note. Thank you so much for taking the time out and speaking with us and give us some sense that what are you penciling in when it comes to the global markets and the way forward.